Ladies and gentlemen, Daniel Estrada. How's it going, Daniel?
Very well, Tim. Glad to be here.
It's great getting to know you over the last few weeks. Thanks so much for carving out the time. There's a ton of stuff that's happening with 86 Repairs. Why don't we just kind of start off for folks that don't know about Daniel, don't know about 86 Repairs. What is 86 Repairs? What do you do for the marketplace?
Sure. Well, our solution for customers is actually very simple. We're a subscription service for restaurants and other commercial kitchens. So if you run a restaurant and something breaks in your kitchen or your air conditioning's down or something like that, you just send us a text and we manage the whole process of getting it fixed. And so behind the scenes, there's obviously a lot of technology and a lot of work that goes into making that a seamless experience for customers. That's it in a nutshell.
That sounds good. I can sense that you've worked on your elevator pitch. That was very succinct. I have an idea of what the software does. What goes on at restaurants? We all go to restaurants. You know, I'm trying to put myself in the shoes of a restaurant owner. Like, I got to imagine it's similar to like owning a house in a lot of respects. Like, you have an HVAC unit, you have like a stove for the kitchen, you have an oven. What's
right.
kind of like current state for restaurant owners, and what's the pain point there that you're trying to solve?
Yeah, well, even pre-pandemic, there was a lot of pain around managing this process. So if you think about a typical restaurant manager who's running around, they're doing 50 different things at the same time usually. And managing repairs is one of those things that isn't the highest priority until suddenly it is. And those problems pop up often out of nowhere. There's not a lot of data, not a lot of history that's being tracked on this equipment. And so operators are really making decisions in a vacuum of having good, insights and good knowledge of what's going on. In addition to that, you have very high turnover among restaurant managers. So even pre-pandemic, 6 months was the average tenure of a GM in a restaurant. And that's a pretty brutal cycle if you think about trying to keep track of what's been worked on and how much money have we spent on this piece of equipment and who are the vendors that have been out here, right? Every time that GM leaves, they take all that information with them because none of this really gets tracked. And so it was a very painful thing when we started thinking about building 86. That was one of the first things that really stood out to me was when I talked to restaurant operators about managing repairs. They had this visceral emotional reaction to it. And that was really the thing that got me interested in trying to solve this problem. So it's a pretty hard thing to deal with. And so we're really just trying to make that experience, like I described it, very simple for that frontline manager who's trying to do all these things. The pandemic has only exacerbated these problems because we can get into this, but supply chain issues, vendors are all short-staffed, so getting repair companies out to do work is tricky. We have our customers are short-staffed, right? The restaurant industry, food service industry broadly has about 1.3 million unfilled jobs right now. So there's just high strain on everybody in the industry.
I'm trying to put myself in their shoes, and I feel like I can't, I'm a homeowner, recent homeowner. My family kind of settled down, and just getting a plumber on the phone to take a look at the electrician, the painter, even just getting a response, and then scheduling is all across the map, and then getting a proposal, and then once the work is that they have one person show up for a 4-person job, they're there for days. Is it the same kind of thought process or pain points that exist in a restaurant? Is that a good way to think about it?
Yeah, it really is. The kinds of pain that we feel dealing with repairs in a home or fixing a car, right? Those are the same things that restaurant operators deal with. The difference is our average restaurant location has 80 pieces of equipment and infrastructure that need to be, managed. And so if you think about a restaurant, it's a uniquely complex facility because you have all the things you have in every building, right? Plumbing, electrical, HVAC systems. But then you also have this complexity of running a kitchen. So you have refrigeration equipment and you have cooking equipment and you have a fire suppression system, right? That keeps the place from burning down if there's a grease fire or something. So all of that, all of these different appliances, not just what's in the kitchen, but then also the stuff that you need to run the facility itself is all there. So most people don't realize how much equipment really goes into running a restaurant because we never go into the back of house, as they call it in the industry, right into the kitchen. And so even smaller restaurants, smaller quick service restaurants like a Jimmy John's or McDonald's, have a lot of equipment.
Interesting. All right, so we'll talk about, there's a lot of fun things that are going on in 86 repairs, fundraising,
Yeah.
hiring a team, scaling. Like we'll get into that in a little bit in a second, but
Yeah.
talk to me about like why entrepreneurship? Like entrepreneurship is scary. Like there's a lot of, there's the big failure rates, like fundraising is hard. How do you do that? There's not a good like playbook for that. What's your journey into ultimately starting 86 repairs with your co-founder?
Yeah, good question. So I've always been kind of geared toward entrepreneurship. Even when I was very young, I was really interested in working for myself, and I've done it. I've kind of come in and out of it a few times. I ran a couple of startup companies, including one with my co-founder Joe about 12 years ago. But this is the first time we've run kind of a real venture-backed startup company that's growing as quickly as it is, and um, I think one of the things I always talk to other founders about is I think if you look at the risk as kind of a relative thing, it's a lot easier to process that. And what I mean is, the worst case scenario, for somebody in my position, I've had a career, I've been working for about 20 years. I have that to fall back on if the company doesn't work, right? And the company is working, we're doing really well, but it's, when you start, you don't have that sense of, is this thing gonna work, right? You just have your own kind of idealism or your own hope, and you have to take the leap. I took the leap knowing that there was a plan B, right? And I knew the worst thing that could happen was I was going to scuff my face. Maybe it doesn't work. We take a few years, we
Sure.
try it, it doesn't work out. And I think that's been a really important part of my perspective and just even being willing to do this, because I don't consider myself a particularly risk seeking person, right? Or risk tolerant. I really don't. I think, I think you have to understand what level of risk you want to tolerate and jump off the cliff if that's what you decide to do.
What level of like preparation went into ultimately making the plunge in your first business? Because I had talked about this on the show before. Like, I almost wish we talked years ago, honestly. It's like, I tell people, like, I went through years of like reading Inc. magazine and watching videos on entrepreneurs and studying, like, I was always fearful of like money and like supporting my wife and my future family, right? And it's like, okay, I gotta save. And I think I kind of overthought it to a certain degree, but I'm glad I went through that preparation because it made the journey a little bit more easier. So what preparation, either like thought energy, studies, mentorship, did you go through before you ultimately made the plunge?
Yeah, that's a good question. I mean, that kind of goes into the founding story of 86 a little bit, which is, for me, my co-founder and I were both in corporate jobs that run their course for us, right? We weren't super happy in those roles. And I was working overseas. I was living in London and had a solid job there, but not one that I was particularly excited about. And he was in the same spot here in the US. And so we started talking about, hey, we should think about starting something again, right? It'd be really fun to start another company. And even before that, in times when the first time I did this, it was something that I kind of just fell into. There was an opportunity, there was an idea, and I said, well, let me try this, right? And I've always kind of tiptoed into it, which I think that's a little contrarian to the advice you usually hear. It's like, no, quit your job, sell your house, and go start a company, right? I think that's a very extreme perspective, and I think very few people actually start that way. And those are just kind of the crazy stories we hear, right? There's a ethos of dropping out of Harvard to start Facebook, right? That kind of mentality, and this is not practical for most people, and it certainly wasn't for me. So we sort of tiptoed into it a little bit, right? And Joe, my co-founder, worked in the food equipment business for about 10 years, and so he knew the industry, and he said, hey, I think there's something interesting here, right? There's no data about how this equipment's being managed. Nobody's tracking things. It's, very fragmented industry. There's a lot of pain I'm hearing, right? Seeing this, and I don't know what exactly is here, but there's something interesting here. So I was very skeptical, frankly, of, selling to restaurants to begin with. They have a reputation of being very flaky and hard to pin down, which is true in some segments of the industry. And I also didn't know anything about this industry, right? I had never worked in the industry before, and so I was pretty blind to it. And so we took a pretty, I think, measured approach. We went and talked to some restaurant operators and asked them about this process, right? And that's when I started hearing this really strong pain from them. And, we looked into what other solutions there were and how people were trying to solve this problem. And so we spent about 4 or 5 months just kind of getting to know the problem and coming up with a hypothesis. Here's a service we think restaurant operators would buy, that we think they would pay us for it. We asked them, would you pay for this? Right? Would you pay for somebody to manage this for you? And then the next step was, the proof is only in the pudding, right? You can ask people if they'll pay you, you can run surveys, you can do whatever you want, but until someone actually writes you a check, right, for the service, it's really hard to validate an idea. So we did that, and we didn't have to quit our jobs. We didn't have to sell anything. We didn't have to spend a lot of money, right, to set this up. It was toothpicks and bubble gum in the early days, right? And we were running the business on a spreadsheet and our time. And when we saw that there was momentum and we had some early beta customers and, it was working and there was something there, then we just kept stepping on the gas in different ways, right? So I quit my job, we moved back to the US, which again, sounds extreme, but we were planning to come back to the US, that was kind of always in the cards. And I might not have done it as quickly had this opportunity not presented itself, but we went and talked with investors, right? There was some interest. We got a couple of early small checks. So that momentum and people kind of believing in the idea early on just really helped. It helped catalyze us to move into it and feel more comfortable, like, okay, there's something here, right? I'm not just taking a total flyer on this business.
If people Google 86 repairs, your recent fundraising this year will show up. Total of 7.3. I think it sounds like you took some checks early on. Did you raise capital on your previous business with your co-founder?
No, this was the first time we ever raised any money.
Where do you start? I think that's a question a lot of people have.
Yeah.
I don't know rich people. I don't know investor. I don't know
Yeah.
institutional investors. Where do you start? Where do you go for information? What was your story around that?
Yeah, so I think that's a great question, and it ties back to something you said earlier that I thought was spot on. A lot of people who do this kind of build up into it, right? They, like you said, they read ink, they follow startup companies, they talk to people who are starting businesses, which I think is great. I've seen a lot of, Clubhouse is a really popular place for kind of the startup conversation to be happening. And for me, I had, from previous kind of forays into working with startup companies and being in kind of the technology space, I had a few contacts in the venture capital industry, and I had some folks I could bounce ideas off of. And I also knew, because I was connected, to a lot of tech founders, I knew other founders, and I talked with them, about what it was like to raise money and who they would recommend talking with, right? And I got a lot of sort of positive references on a few investors. And, the very first investor that said yes to us was Invest Detroit Ventures in Michigan. And Invest Detroit is a just really solid group of people. And it took me some time to, get a meeting. I got an introduction from somebody, got a meeting, we pitched them, took some time for them to get comfortable with the idea and believe in it. But that first, vote of confidence goes a really long way. And it doesn't just go a long way for us, sort of emotionally, right? This is the first person outside of the founding team that really believes in the business enough to, write us a check. And I think it was $50,000 or maybe $75,000 at the time. And that makes a huge difference when you're starting out. But Patty Glaza, who's the managing director there, she, took the time and had the confidence to make that move. And so that was really impactful for us. And the other way that it creates momentum is when you have investors tend to be very interested in who else is investing, right? Mm-hmm. They have FOMO of missing out on deals that are going to blow up and do really well. And so they often look for signals in the market, right? They look at other investors they respect and see what they're doing. And so, having the first investor is probably the biggest hurdle to overcome. And we raised, so that investment from Invest Detroit rolled into a $1.5 million round that we closed in March of 2019. So over a few months, we raised some money and got that whole round together. But I met with about 130 investors, and we had about 12 who ended up investing.
That's a good stat for
Yeah.
people. Just
Yeah.
it's very eye-opening, I think, for people who are like, I got an idea, I need to start kind of somewhere. We've had
Exactly.
plenty of VCs and private equity folks on the show, and we always ask the question, like, what do you look for? And as you were going through that process, with the questions that they were asking you, what do you think they were looking for? And then what were some of the interesting things for them, whether it was you and Joe, or the idea, or the addressable market, or how far you've come? What were some of the things that you think were triggers for them to go, okay, I'm actually going to like invest in this business and take the ride with 86 Repairs?
Yeah, I think it's a great question. It does depend a little bit on the type of investor that you're talking to, right? In the Midwest, investors tend to be, more interested in unsexy businesses like ours, right? Things that kind of look unsexy on the surface and then start getting really interesting. They also tend to be a little bit more focused on financial metrics, right? Rather than just kind of pure emotional potential of an idea. Also, I see more B2B businesses being funded out of the Midwest versus, you see much more B2C in other, parts of the country, especially on the coasts. So I would say almost every seed stage investor or pre-seed investor for sure that I talk to says the founding team is the number one thing that they're measuring the potential of the business on, because frankly, you don't have any other inputs, right? You don't have a growth rate, you don't have revenue in those early stages, right? And so one of the things that helped us is we built up a little bit of revenue and we had some traction, and we were able to say, hey, here are 10 restaurant operators who are already paying us for this. We don't have any software built, we don't have any tech, powering this. We're just kind of manually managing it. And they still want it, and they're still willing to pay us for it. Imagine what that could look like if we had the capital to scale the business. And so I think that's a story you have to tell, is where is this going to go, right? Troy Hennekoff from Math Venture Partners in Chicago has a great video on this actually. And he always talks about the pot of gold, right? You have to show investors that there's a pot of gold, right, at the end, and that there's a low risk path, or at least manageable risk path to getting to that pot of gold over time. And I think that's right. So, after, understanding, kind of getting to know the founding team, I think they want to see some industry expertise, especially in a B2B business. They want to see that founders have thought through the other questions they're asking, right? It shouldn't be a surprise. You shouldn't be, caught off guard by how big is the market and how many customers do you think you can close and how fast can you grow, right? Those are the kinds of questions they're going to ask. But I think definitely market size, the potential for the business, how big could this be and why, right? Just some back of the napkin kind of understanding of how big, the opportunity is. Those are probably the biggest things in the early stages. Can you, what are the risks to executing on this? Can you execute on it? And is the opportunity really big?
So you mentioned you were doing this manually at first, and I think there's a lot of proof points to those that are listening around, like, all right, co-founder in the industry, you have this big corporate job, you have like global purview around certain industries. It doesn't sound like either of you are a software engineer. Where did it go from there? You got this idea, you can maybe optimize this through technology. If you don't have like a CTO co-founder, what path did you take to get this off the ground?
It's a great question. So I was a recovering software engineer, but had not been writing code for a long time. And so I haven't written a single line of code for 86. That was definitely a gap for us because we are a technology company and we need to address that. So we hired, one of our first hires was basically a head of product, engineering manager who basically built the first version of our software platform. And so what we told investors was, look, we're going to need to fill, that tech gap. We know technology well enough because of our backgrounds, right, to manage that effectively, but we're going to have somebody here who's actually writing code. So I think in some of those early meetings, we may have already had that person on the team. And so that helped just provide some assurance. But yeah, tech risk is a big thing, in a company like ours, especially.
So you just raised some money. What's, you raise your first like semi-big round. What's on your plate right now? I think, what was it, 3 months ago, you like officially closed, maybe you got some checks in there before then, but like, Where do you go from here? What phase are you in?
Yeah. So one of the key things about running a startup company is that things are constantly breaking, and you're always just outgrowing. You're always outgrowing the last phase of the company. And so for us, around probably April, May, we got to this inflection point, maybe even earlier in the year, where we were getting to we're getting to the point where the processes and systems that worked when we had a couple of hundred customers, were starting to break down, because now we were dealing in larger orders of magnitude, right? Hundreds of customers across the country. We're getting close to 1,000 restaurant locations on our platform, and so having that, having the kind of growth we've seen, the company's grown about 150% year over year. So having that kind of growth and seeing those processes start to break down, you want to be as proactive as you can, but often you're reacting, right? Because you don't always know what's going to break, right? And sometimes what's going to break, but you don't have the resources, or it's not the right thing to prioritize to fix those things. So I think one of the things you have to do really well as a founder, especially as a CEO, is know what fires to let burn. And that's been a hard thing, I think, for me in this role, is knowing I want everything to be buttoned up and tight and working well, but I have to recognize that out of 20 fires, we may only be able to put out a few of them at a time, and picking is hard, and we don't always make the right decisions about that. So we're at this inflection point where we're looking. Over the last few months, we've been really focused on scalability of the business, right? The scalability is there. We just haven't put the time into building it out. And so getting our team focused on working on the business rather than working in the business is the shift that we're making. And I think that's some of that is a luxury of having more capital. We have more money to hire people and to build out our team and to buy better tools, but mostly it's a focus thing. You just have to find ways of getting focused on that and let the execution run alongside that. And that's pretty challenging.
I love it. Now, we both have corporate careers before starting our current businesses. We talked before this, you've managed teams before, you've kind of seen how departments kind of work together and stuff like that. We talked about some of the benefits there. And, I used to mentor startup founders prior to starting this business when I was waiting a non-compete. And one kind of exercise I would go over is, even though you're the CEO at the start, you're kind of the technician, and the technician could be like salesperson, or you got to build a product, or like whatever your role is kind of at the time. And then you kind of morph to like senior tech, where you're still doing the thing, but you're coaching someone else and kind of pulling them along, and then a supervisor, manager, director. And then you don't really play like a true like CEO role for years, in a lot of different cases. And what's important to CEOs at bigger companies. How have you seen your role change over the last 2.5 years through this crazy growth, adding team members, and how do you kind of categorize where you're at today in that regard?
Yeah, it's definitely something I've been thinking a lot about, especially again as we hit this inflection point, and I'm thinking a lot about how my role needs to change to help our team be successful. I think one of the biggest things, so through this journey, one of the things I've been really appreciative of is that I had those experiences in other companies, big and small. And it's always surprising to me how I can take something from a really big company that seems really, distant or unrelated to what we're doing here, and use that experience to help me make a better decision here. So I would encourage folks who are thinking about being first-time founders to understand and think about how their existing experience can leverage, they can leverage that to be successful, and then fill the gaps, right, with people who have other complementary skill sets. Something a lot of people do wrong, I think, is they hire other people who are like them, because we have good chemistry and we relate to those people. But if my co-founder's strengths and weaknesses matched mine, we would not be as successful as we are. And because they're complementary, it's made a big difference for us. I think, in terms of my role, one of the things that's always been really important to me is that we build a culture of autonomy inside of 86. And what I mean by that is every member of our team needs to feel empowered to solve problems without having to go and ask for permission, without having to go through a process, right, to make a decision. As soon as you start having processes and barriers to making decisions, people retreat into just executing exactly what you tell them to do and not actually innovating on process, not solving problems for customers in the way they need to, and not thinking critically about their work. And that's the thing I've really tried to, arm our team against is we have a team of people, and I can say genuinely, I'm super proud of the team we have because the folks here, they care about the business, they're super invested, and they feel from everything I've heard and seen, they feel a sense of autonomy and empowerment. And along with that comes accountability, right? We're not going to be perfect. We're going to make mistakes. I want our team to be admitting those mistakes, freely and helping the rest of us learn from them and share feedback from customers, with me and other people on the team. So that sense of autonomy has always been really strong since the very beginning of the company. And it's related to my role because I can go on vacation for a week. It doesn't happen very often, but theoretically, I can go on vacation for a week and the whole thing doesn't fall apart, right? And that's what this is, I think, the journey from being kind of owner operator, right, of a business to being a true kind of CEO, right? Which is my job is to make sure that we're moving in the right direction and that everybody knows what that direction is and that everyone's moving in that direction. And if I have to be constantly putting out fires, or I'm the one who can only do this one thing, and there's all kinds of strings I have to be pulling all over the business, that business collapses the minute I'm out of the picture. And that is not a that's not building a business, that's creating a job for yourself.
Well, it's a very
important distinction.
It's very clear that you're mature in your thought processes in a lot of ways, and maybe that's from your experience or mentors that you had or just things that you've picked up along the way. Because I mean, taking a vacation, you could input hey, I got to go raise the Series B and spend my time there, and this thing needs to continue to grow and continue to optimize. And I also think selfishly, if you're going to continue to scale up, your role needs to change over time. But then that's kind of what people want too. Who wants to be in a very process driven environment where Daniel's always looking over the shoulder and scoffing at what you do and picking apart everything, little thing that you do. And I see it so many times where people kind of get stuck in the early stage thought process when they raise money, then they add team members. And I'm a recruiting guy that shows up in the Glassdoor reviews, it shows up in turnover and things like that for sure. So
for sure. I think it's absolutely a common trap. And I think, one of the things we've done well is we've hired ahead of the stage that we're in. And what I mean by that, and especially on our leadership team, we have a head of operations, a head of marketing, head of revenue, and my co-founder Joe, who's running product for us. And those folks all have experience beyond the stage that 86 is in, right? So they were in publicly traded restaurant tech companies. They scaled sales teams, right, from 10 to 100, right? Those are things we haven't done yet, but we've been opportunistic and hiring people when great candidates come along, and it may not be exactly the right time for us. Just saying, hey, this could add a lot of value to the business. It's going to be a hard role to fill. Let's do it, even though it feels early. And I have never ever regretted a decision like that.
I think one of the things that's underappreciated or often overlooked is the CEO founder's responsibility to hire the best and brightest people at every single stage. 100%. And, I'm relating to a lot of things that you're saying. I think, we've hired ahead of our stage as well too. But what I've learned, and I love your feedback on this, it's hard to hire at the early stage because people, you could call somebody and, hey, you want to join this? What is it? Oh, me and Joe, we got some stuff on a napkin. We haven't quit our jobs yet. Right. And it's there's a spectrum, an entrepreneurial spectrum. Dan and Joe and Tim are over here, crazy, quit your job, move across across the world and, plant the flag down. We really need people center right that are hey, I've always wanted to start a business or wanted to get in early, or I always kicking myself because I'm part of a big company, but I always hear the stories of folks that started 20 years ago and the impact that they had. And those people are hard to find, man. I thought I had them several times and then they're nah, I'm good. I got good benefits and stuff like that.
Yeah.
Any feedback there on how you kind of went through that process? Because I think it's daunting for a lot of folks.
It is. It's so funny that you say that because I've had a lot of candidates, and mostly the people we've ended up hiring who sort of said that, like, I'm not really ready to take the leap, or I may never really want to take the leap of starting my own thing, but I really want to be in an earlier stage company where I feel like my work matters, right?
Mm.
I have a vested stake, and that goes back to the autonomy thing, right? It's nobody wants to go to work every day and feel like they're just checking boxes and then they leave, right? I don't care if you work 7 hours a day or 10 hours a day or 12 hours a day. It's not really the, that's not the kind of path and pace that most people want. And so we definitely have heard exactly what you're talking about from candidates. And, I think the thing that's really helped us in the recruiting process, I was really worried about 3 months ago because we were getting ready to raise this round, and I was really worried about hiring. I was like, I don't know if we're gonna be able to find these people. We were hiring 6 engineers, software engineers. We were hiring a couple of salespeople. We were hiring for account management. We were hiring for marketing. I mean, we just had a ton of open roles because we were getting ready to really step on the gas. And I think the thing that's been, now looking back on it, we've been able to fill those roles, and much more quickly than I expected. I mean, we hired all of those engineers in about a 2-month span. And I think the thing that worked was when they came through the interview process, they saw that we were thoughtful about the interviews, right? It wasn't just like, here, have a phone call with this person, then you'll have a phone call with that person, and then you don't hear from us for a month, and then we send you a rejection email. It was, we put down, I'm happy to talk more about this, but we put folks through a pretty rigorous process. They get a chance to understand the company, ask questions of our team. I talk with a lot of the folks we hire, not all of them, but a lot of them. And they see, when they sit on a panel interview with our leadership team, that people are like having a good time, right? They like working here. They care about the company. They think it's great. And they say that. And if you don't hear that, right, we've all been in interviews where it's just like some middle manager who does not, give a crap about what is going on in the company, just checking the boxes on the interview form. Yeah. And I mean, that's, if you can't give somebody that kind of experience where the person they're talking to is excited about the company, how the hell are they ever going to be excited about working there themselves?
Word to anybody that's in a hiring position at a small company, like, you need to, it's a pull, right? You have to like draw people to you. You have to, like, if they're good, you want them, like, they're in the driver's seat, like, screen them.
Yep.
That's what a lot of
companies, that's what a lot of companies don't understand. This is not a buyer's market. This is a seller's market. And if you're not pre-qualifying and pre-selling every candidate on your company, you're not doing it right. Because when you make the offer, you need to know they're excited, they're going to accept, right? And it doesn't matter what you think in the first step of the interview process. You might think they're not a great candidate, but once you move them through the process, that may change. So I try to approach every single interview as, I'm here to sell you on the company as much as you are to sell me on working here.
Totally. Every listener, write that down if you're not doing that already. Daniel, I love jamming with you, man. I hope we can do this off of recording. We're at very similar stages in our businesses, and it's clear that you're on a great path. Everything trickles down from the leader, as I've talked about, and I just know that you're on to great things. If folks that are listening want to follow 86 Repairs, if we have a restaurant owner that has some trouble with their repairs, how do they find 86 Repairs? How do they reach out to you?
Yeah, thanks for asking. 86repairs.com is a great place to start. If folks want to find me on LinkedIn, have questions, want to follow up, I'm happy to respond to a LinkedIn message, and I do keep pretty good track of it. So happy to connect there.
Awesome, Daniel. All the best. We'll talk soon.
Thanks a lot, Tim. Great to be here.